Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, we're diving deep into the AUDUSD, the Australian dollar versus the US dollar, looking at both the latest news and what the charts are telling us. It's July 20th, 2025, and this currency pair is at a fascinating crossroads. Before we jump into the raw price action, it's important to note a slight peculiarity with our data timestamps today. While our daily chart provides a broader historical context from 2024, our hourly and 15-minute charts offer a fresh look at the very recent price dynamics from July 2025, which is particularly relevant to today's market chatter. Let's kick things off with the current market sentiment surrounding AUDUSD. According to recent Google searches, the pair is currently trading around 0.6510, having seen a modest increase of about 0.29% in the past 24 hours. However, the news landscape is presenting a somewhat conflicting picture. On one hand, FX Street suggests a bullish bias active on the daily chart, indicating potential for upward movement. This aligns with reports from Trading Economics highlighting a surge in iron ore prices, a key commodity export for Australia, which is fundamentally supportive of the AUD. Furthermore, a general slipping of the US dollar, as mentioned by investing.com, also provides a tailwind for AUDUSD. Yet, there are clear cautionary signals too. Economies.com notes that AUDUSD suffered sharp losses recently, breaking a key support level at 0.6485 and suggests a dominance of a bearish correctional wave. Adding to this, UBS projects potential RBA rate cuts if the Australian dollar falls below 0.65, which would certainly weigh heavily on the currency. Action Forex offered a neutral bias last week, pointing to short-term topping at 0.6594, but also a recovery from 0.6453, implying a battle between buyers and sellers. So, we have a mix of bullish factors like iron ore and a weaker USD, clashing with potential RBA dovishness and recent technical breakdowns. Now, let's turn our attention to the charts themselves, starting with the broader daily time frame, which covers data from early March to mid-July of 2024. Observing this historical data, we can identify a general downtrend over this period, marked by a series of lower highs and lower lows, despite some strong relief rallies. Specifically, the price action shows significant support levels around the 0.640 and 0.645 marks, where buying interest historically stepped in during 2024. Conversely, resistance was frequently encountered in the 0.66 to 0.67 range, consistently capping upward movements in that time frame. The volume during significant swings in 2024 often spiked, indicating strong participation during those momentum shifts, something to always keep an eye on. While this data provides valuable insights into past price behavior, remember that the market context changes, so let's look at what's happening more recently. Moving to the 1-hour chart, which presents a more granular view of the beginning of July 2025, specifically from June 30th to July 3rd. Here, we can see a clear short-term upward movement. Price climbed steadily from around 0.6532 on June 30th to reach a peak near 0.6587 by July 1st. This initial rally demonstrates some underlying buying pressure in the very early days of July. However, this was followed by a gradual corrective pullback over the subsequent days, with price finding temporary stability around 0.6566 by July 3rd. The volume during this period remained consistent, supporting the integrity of these price movements, indicating they weren't just low liquidity spikes. For the most immediate action, let's examine the 15-minute chart, covering mid-July, from July 15th to July 18th. Initially, the price action during July 15th showed a tight consolidation, largely holding within the 0.6510 to 0.6520 range, reflecting a period of indecision or accumulation. However, if we narrow in on this specific period on July 16th, between 15:16 and 15:46 Universal Time Coordinated, we observe a rapid and significant downward move. The price sharply declined from approximately 0.6549 to 0.6515 in just 30 minutes, indicating strong selling pressure or a significant news event during that exact window. Following this sharp drop, the price attempted a minor recovery but subsequently entered a more gradual, but consistent, grind downwards, reaching around 0.6499 by the end of our data on July 18th. This latest price point from our specific chart data sits just below the 0.650 level, slightly differing from the 0.6510 current price reported in today's news for July 20th. This suggests a slight rebound or renewed volatility over the weekend leading into today. Bringing all these pieces together, the current market price of AUDUSD around 0.6510, as indicated by the latest news, places it right at a crucial juncture. The 0.650 level is acting as a short-term psychological support, a line in the sand that traders are watching closely. The news report about 0.6485 being a broken support level is highly significant. If the price fails to hold above 0.650 and retests and breaks below 0.6485, it would strongly reinforce the bearish sentiment seen in some of the news and indicate further downside is likely. Conversely, the bullish narrative is primarily driven by the strength in iron ore prices and a weakening US dollar. The historical resistance around 0.6594, mentioned by Action Forex as a short-term topping point, is a key hurdle for any sustained bullish run. A decisive break above 0.6520 to 0.6530, which has acted as consolidation resistance on the 15-minute chart, would signal short-term bullish momentum building. If AUDUSD can then clear 0.6594, it would indicate a more significant reversal of the recent bearish correctional wave. The UBS comment regarding RBA rate cuts below 0.65 is a potent bearish trigger. Traders should be extremely cautious if the price starts to linger below 0.65, as this could quickly turn into a self-fulfilling prophecy for RBA action and further depreciation. From a short-term trading perspective, the pair is likely to remain highly volatile. We can anticipate swings between the immediate support at 0.6485 and resistance levels around 0.6520 to 0.6530. Long-term, while our 2024 data showed a broader downtrend, the current fundamental drivers, particularly iron ore, offer a potential for reversal. However, for a true long-term bullish reversal, AUDUSD would need to reclaim and hold above significant levels like 0.66 or even 0.67 from our historical resistance points. This would require sustained positive momentum and a clear shift in global economic outlooks favoring commodity currencies. To recap the most important price levels to watch. On the downside, critical support lies at 0.6485, and if that breaks, the next major level is 0.6450. On the upside, immediate resistance is at 0.6520 to 0.6530, followed by the significant short-term topping point of 0.6594. Let's consider some unbiased predictions and the conditions that would reinforce them. Scenario 1. Bearish continuation, 40% likelihood. A break and sustained trade below 0.6485 is probable if global risk sentiment sours, the US dollar strengthens across the board, or if the Reserve Bank of Australia signals more imminent rate cuts. This could lead AUDUSD to test 0.6450 and potentially even lower if momentum builds. Scenario 2. Neutral to modestly bullish, 60% likelihood. The pair holds above 0.6485 and manages to break above 0.6530. This outcome is more likely if iron ore prices remain elevated, the US dollar continues its recent weakness, or if Australian economic data surprises to the upside, pushing the pair towards 0.6594. Beyond price levels, keep an eye on trading volumes. A significant breakout or breakdown on high volume signals strong conviction in that direction. Upcoming economic announcements from both Australia and the United States, such as inflation reports, employment figures, and central bank speeches, are major catalysts that could rapidly shift sentiment. Always stay informed about these macroeconomic events, as they often dictate the currency's major moves. That's all for today's in-depth analysis on AUDUSD. Don't forget to like this video, subscribe to Explain the Charts for more insights, and let us know your thoughts on AUDUSD in the comments below.